You're buying your first property or your first investment, and you're at the stage where you need to get your finance ready. Well, if that's the case, this is the episode for you. Welcome to the Buy Assets and Work Less podcast, the podcast that shows you how to stop trading your time for money and instead build lasting wealth by buying property and investing. I'm your host, Steve Williams, and today I'd like to welcome to the show, Aaron Brewer. Hey, Aaron.
Thanks for having me. Cheers, Steve.
So Aaron is a legendary mortgage broker, and you may have seen his content online, and he specializes in helping a wide range of his clients get access to money. But Aaron, do you want to give us a little bit of an overview of what you actually do?
Yeah. So as Steve said, I work as a mortgage broker, and I guess my main role is almost like a matchmaker. So I'm out there looking to understand exactly what clients are doing in their financial position, and then I'm trying to match them to the ideal bank, and not only to get the best home loan in terms of rates and repayments and fees, but also to help them build wealth through their journey in property.
Awesome. And one of the sayings I hear out on the street is that property is a game of finance. Would you agree?
Yes, it is one of the biggest games that you can play, I guess, the game of finance. And how we kind of approach that is by understanding with our clients what they need to do in the real world of finance and understanding how that applies to their property goals. Because without finance, there can be no investing.
Yeah, absolutely. Totally would agree with that. And often you get stuck if you can't get access to the finance. So that's why it's like so critical to make sure you get everything set up from the start. And honestly, I'm a massive advocate for mortgage brokers. I've been directly to banks before, and I always find that using a broker and having someone on your team that actually knows the ins and outs and the rules of how all the different banks work, it's a game changer. And a lot of our listeners, Aaron, they're kind of in two situations. Number one is they might be living in a big city and they're wondering how they're ever going to be able to afford a property. They're looking at the prices in Melbourne, Sydney, Brisbane, and they're thinking, wow, $1 million for a house, that's crazy. Or they might also be in the situation where they're lucky enough to have their first property and they're slaving away at work and they're thinking there's got to be a better way. And they're wanting to buy an investment property to kind of expand their portfolio and build their wealth. And so they're the two situations that a lot of our community are in. Did you want to talk to us if you are starting out and you haven't yet got a property and you need to get access to finance, what would you recommend they do in order to start to get ready for that journey?
Yeah, I have this conversation a lot with people in terms of just when the timing is right to chat about your goals. And I think that you can never start too early. Talking to a broker is not something that you need to do when you're making an offer on a property or you're ready to pull the trigger. You can chat to a broker long before that's even going to happen. I work with clients that could take from 12 months to 24 months to buy their first property. And I think that you can never start too early to just understand a little bit more, because the more that you can learn and the more confident my clients feel, the more confident they're going to be when it comes to that huge step. And it is a massive step. It's one of the biggest purchases that someone may ever make. It might be their first property to live in, or it could be their first investment property. So I am a real advocate of just start as early as possible. And often it starts with just speak to a mortgage broker.
Absolutely. And Aaron, I was saying that a lot of the people in our community, they're kind of wondering how they're ever going to be able to afford something given the prices in a lot of places. But are you seeing many people coming to you who are in that situation, and what are they doing to get their foot in the door?
Yeah, it's a big one. And even more so now in Perth, where we're currently located, is that affordability scale has just gone, all over the place. So the discussions that I'm having with first home buyers nowadays are a lot different to a couple of years ago, where now we're thinking of different suburbs that they might be able to buy, and whether that is to occupy and they want to live in these properties, or it's down the more transitional route of that rent vesting strategy, where they might rent in a suburb that they really want to live in based on lifestyle and affordability, and then they might buy in a suburb that's specifically for investment with the long-term outlook of some growth there. So it's really satisfying. What do you actually want to do? Are you happy to not tick all of your boxes and go down the route of finding a suburb you can live in and occupy? Or do you want to go down this route of this rent vesting approach, and how might that change for your lifestyle?
Okay, great. And if I'm living out my life and maybe I'm living in Leaderville or
Yep.
maybe in Cottesloe. I mean, that's the
Yeah,
equivalent of Bondi over on the east, or maybe St Kilda in Melbourne. If I'm living in these suburbs and maybe I'm living in a share house situation and I really love my life there, I love the lifestyle, the location, but I want to buy a house, right? And buying a house in those suburbs, like you're talking over $1 million, and it's really unaffordable. Like, what would be the advantage from a finance perspective of actually considering, hey, I can actually buy in another location, buy it as an investment for my first purchase? How does that play out from a finance point of view?
I mean, the biggest thing is just that lower entry cost, right? If you're renting in a suburb that maybe you couldn't afford to buy in, you can start to look out to suburbs that maybe that median price point is somewhere around like a 500 to a 700 or something like that. So it means your entry cost to start with is lower, stamp duty may be lower, so your upfront cost is lower, and the requirements for your deposit may be, in line with that as well. So in most cases, it can be that the price point is just a lot lower to start with, which means your upfront cost is a lot lower to actually get on board and get started.
Okay, great. And I've heard as well that if you say you've got an affordable rental amount, you're only paying, say, $200-300 for a room wherever you're living. Maybe you're even living with parents, and you've got this low cost base. But in terms of your borrowing capacity, how does that? And obviously, you'd be getting rental income from this other property. Is that favorable from a lending perspective?
It depends. So some people will live at home and maybe they're, lucky enough to be living home rent free. Lenders are cautious of this because not everybody can be living rent free. And in most cases, they apply this notional rent, which is basically the minimum that they'll accept towards rent for your current living situation, even if that was you living for free. And they'll apply that to your current amount, which can work out for some lenders about $500 a month to maybe $650 a month, which could be a lot higher than what your expenses are. The favorable thing about buying an investment property as well, even if it's for your first property, is that you can use this proposed rental income. So whatever rent the property could get, and that could be validated by a valuation estimate or a real estate agent's valuation estimate as well. And therefore, it can actually work to increase your borrowing capacity because you've got your income plus the rental income you could achieve from the property.
Okay. And just so I've got this right, if you have that scenario and you're paying your rent, and then you've got a property that's attracting rent of, say, $700 a week, is it actually potentially enabling you to get more funding than if you just if you move into a property and live in it as your principal place of residence?
Potentially, depending on what your rental arrangement is and how much you can get for the property, then that could allow you to increase your borrowing capacity a little bit. Yeah,
cool. Awesome. And if you are in that situation, you are looking to go and buy your first place, what would be probably, like, say, the top 3 things that people should get ready or at least consider before they go and speak to a broker?
Yeah, I think the biggest thing is understanding their financial position a little bit more. And some people may not even understand how much they get paid or how it all works. So I think the biggest conversation I usually have with people first is understanding, this is how much you could potentially borrow based on your situation. And the bank will include, your income, your expenses to give you an estimate of borrowing capacity. And then what might go along with that is that deposit that's required. Either you're doing it with a 20% deposit, which is, the sort of standard, or you may be using the first home guarantee scheme if it's to occupy, or you may be doing something where your parents are guaranteeing it as well. So you're working these two sides of it to find that bit of balance. And then what I usually recommend for people, because I know when I'm sitting with someone, it's numbers on a piece of paper. If I'm saying to someone, based on your situation, you could afford to buy for sort of 500,000. You actually have to go and test that in the market, especially as a first-time buyer. You've got no idea what a property is worth. You might drive down the street and say, oh, that looks like a great place, but it's worth $1.2 million. So you actually need to go and realistically look at these scenarios to see if it's considerable. And then if someone goes and looks at a 500K property and they say, there's no way that I want to live in that if I'm going to occupy it or I'd want to have that as investment, then they come back and say, okay, this is what it needs to be based on what I've seen. So it's almost like, understanding what the current financial position is and then going out and sort of testing that theory in the marketplace to see if it's even going to work.
Gotcha. Yeah. And one of the things you said there, I think is really critical for people to understand is if you have that conversation early to look at all of your options. I mean, I often speak to people and I say, okay, why aren't you buying right now? Property prices in some locations, if you're in Perth, for example, they're going up maybe 5, 10, 15,000 a month. And they're saying, hey, I need to save for my deposit. And really, if the prices are going that quick, it's not possible to really save at that amount. Like you're better off kind of getting into the market as soon as possible. At least you can capture the growth. And one of the things you said was around having family or friends potentially go as a guarantor, which I think is a good way, good thing to consider. For some people, that may not be achievable if there's families overseas or it's not a possibility. But if you are lucky to have people that might want to support you, and they don't necessarily need to give you cash or give you money, but it can just be an arrangement or an agreement that they can at least help you get your foot into the door. And then down the track, eventually get out of that agreement. But if it means you can get in and get your foot in the door, it could be a good way to go about it. Is that something you see come up very often?
Yeah, I think it's a really good discussion to have. And generally it's a discussion that I'll have with the clients. And if it is parents and they're getting involved with the parents as well to understand exactly what they're sort of signing up for. But it's a way that, like you said, that you can get involved without any sort of cash handover. There's no transfer of cash or anything like that. It's just a way to ensure that your child can start with the best sort of intentions and understanding the risk. I guess one of the things that's helpful in a rising market like Perth is that guarantors are able to leave a little bit earlier than maybe they would have thought. So it's not a 30-year commitment to the loan. It could only be as short as sort of, 1 to 2 years before the guarantor is able to get removed. And one of the really great things that I like to do with anyone that might consider a guarantor is to actually set a plan in place to say, okay, this is what we would need to either pay down the loan to if the value never changed from what you bought it, to be able to remove you as a guarantor so that they've got that, that feeling of safety that they're not going to be, on the hook for their whole life.
100%. And I think there might be a little bit of hesitation around that. And I know that for some people, it's a little bit awkward asking for help. I know that sometimes I struggle to ask for help, but if it's painted in a way where it's not really going to be to the other person's detriment and at least people know what the requirements are and what the potential liability is, it can help kind of soften that and help people see like that's a viable option to help you get into the market. Yeah. So, but it's quite complex, and we probably can't cover all of that on today's episode. Maybe we can do an episode down the track. But yeah, at least people know that that's a really great option.
Yeah, absolutely. Yeah. It's a really good, really good option for someone. And it's something that if it's not feasible to do on your own, then it's definitely a discussion to have with family in the beginning as well to see if it's, something they could help with.
And I think as well that going down that track can often be a much better way than buying like with somebody else as actually like joint owners of a property. I mean, in the past, I've actually bought a property as a joint venture with my dad. We did a development together. And before I bought that, I didn't really know what the rules were or how it all worked. But later on, I discovered you can actually get trapped in a financial situation where you can't go on and get more lending. And they almost treat you like a married couple and all your finances get rolled into one, and it may not suit everyone. So it's really important to have those conversations before getting into the arrangement. Otherwise it can be a bit too late and you're going to end up paying a ton of tax and a lot of inconvenience. Yeah, for sure.
Yeah, absolutely.
And Aaron, we've talked a lot about people who are buying their first property and maybe they are going to be a rentvestor. There's also a lot of people out there who they're lucky enough to have got into the market and they've captured some like quite substantial growth over the last 4 years, especially since COVID, the COVID era. And if you're in Perth, certainly over the last 2 years, there's been quite a lot of growth. So people have what's called equity. Do you want to tell us what is equity? Yeah.
I mean, the simplest way to explain it is it's the difference between what your home might be worth. And the bank will always take up to sort of 80% of the value of your home. And then you minus any existing debt. So it's the difference between your value at 80% minus your current debt is the available equity that you could access from the bank.
Gotcha. Cool.
Yep.
And so if I've got equity in my property, and I'm thinking I want to actually build my wealth and I want to grow a property portfolio, do I need some cash to put towards this next property, or how does that all work?
Yeah, this is the great part, is that equity is that cash store, right? Anything you pay down off of your existing mortgage and your house going up in value just increases that equity position. So in most cases, to go from one property being your first property into your second property, you most of the time won't have to put up cash to do that. You can rely on the equity that goes along with that property growing in value. And most people will do this to leverage that first property. They'll access that existing equity and then use that as the deposit for the second property. It just has to coincide with the fact that you can still borrow that amount of money based on your income and situation from the bank to be able to do that. So in most cases, no cash or savings required for the second purchase.
Yeah, awesome. Cool. Yeah, if you take that equity out, you're going to go and buy a second property. And if you buy it in the right market, where it's a growing market, say you get 5% growth on a property. I mean, 5% is fairly conservative. That's like more of a long-term average. I mean, some places like Perth, you're getting anywhere from 10 to 15% growth at the moment. Times will change, of course, but that's currently what's going on. And if you're able to get, so that's a $60,000 increase per year on a $600,000 asset at 10%. And say your mortgage repayments are $35,000, you can kind of see quite, clearly there that there's opportunity there to increase your net worth.
Yep.
And of course, it's always about holding it for the long term and riding the wave of a few property cycles. But is that something that a lot of people are doing at the moment? Or are people a bit more cautious, do you think?
I feel like, especially in WA, a lot of the conversations I'm having are around, we've got all this equity. What do we sort of do with it? And again, to tie it back to working with a broker, and I'll advocate for brokers here, is that using a broker in tandem with other professionals is where you can really get clear on, how to utilize that and how to actually build wealth. So, using a financial advisor, an accountant, a buyer's agent to be able to look at, okay, I've got access to X amount of dollars in equity. This is what my financial position could do. I could borrow another, Y amount to go and buy a property and increase my asset base. So it's really key to have those conversations. And that's what this last sort of 6 to 12 months has been inside of Perth is, what can we do with this, and putting them in touch with the right professionals to sort of say, these are all of your options. What do you feel most comfortable, and what are your goals long term?
Awesome. In my last episode, I actually talked about one of the mistakes people make that I actually made myself is they think, okay, cool, it's time to go and buy the second property. They go and get a mortgage, and then they might live in a suburb, and they think, oh, I might buy in the suburb next door because I know that suburb. Or maybe they've got 400,000, 500,000. They think, okay, well, if I want to buy in my home city, I'm going to have to buy an apartment, which may not actually be aligned with their goals, and it might not be a good investment. And I guess the risk that people have is if you put all your eggs in one basket. So if you're buying two properties in one location, you're obviously riding two surfboards in that wave of growth and potentially stagnation and even decline. Like property doesn't always go up. It's all about the cycles. Do you see that diversification is something that, like, do you agree with diversification as a strategy and buying 100%. In different markets? Yeah.
Yeah. And this, I mean, one of the things that I'll talk to clients about, and we're not financial advisors, we can't talk about specifics around advising, but it would just be considering, what do you actually want to do here? And do you think that what your theory is aligns with what the actual return will be? Because most people can get this confirmation bias of confirming, in Perth that, okay, it's grown by 30%, so it's going to continue to do that forever. And they almost, create this self-fulfilling prophecy where they think that they can, pick any property and it's going to go up in value. So I guess it's kind of like having that hard conversation and just coming at it from a different way of being like, do you actually think that is, realistic? Because yes, you bought and you've done really well out of it, but the market has done the heavy lifting for you, and maybe the timing was just right. Should you consider, advocating and using a professional that can do this for you? Because your chances of buying something again that does really well is very slim. It's honestly just a roll of the dice. And property can make people very wealthy. It's got a track record, but it can also, set you further back in your financial journey. So it really matters, and that's why you have to use a professional when it comes to these sort of situations.
Yeah, I think being realistic is so critical, right? And I think you see on Facebook all these headlines of you can achieve 15% capital growth, or you can achieve 15% rental yield, right? It's not sustainable for the long term. You may get it in the short term, but if you're looking at and thinking that's something you're going to get for 10, 20, 30 years time, then it's absolutely not true. And so you need to be in touch with what reality is. And if you look at reality, it's still good numbers. They generally work out. But exactly as you said, you need to speak to the right professionals and get varied points of view. Make sure you've got a full team behind you. You need your mortgage broker, your accountant, financial advisor, buyer's agent, and all the research to back up those decisions. Because I think when the market's been going really well for a number of years, which it certainly has been, you can be a little bit keen and a little bit too aggressive, and then if things do change, then it can kind of bite you a little bit in the bum. So you don't want that to happen. Well, Aaron, look, I've learned heaps on today's episode. It's always great to have you here and talk finance, which is so critical in the game of property. And for anyone, if you have any questions that have come up from today's podcast, you can pop them into the comments below. We'll get back to you and answer your questions. And Aaron, if people want to reach out to you and ask you a question directly, how can they connect with you?
Yeah, you can get me on Instagram. Is probably my favorite handle. And you can get me there at Aaron Brewer _broker.
Perfect. We'll pop that into the show notes below if you want to find Aaron on socials. Well, Aaron, it's been really awesome having you here today. Thanks for your time and imparting all your knowledge and wisdom when it comes to finance. If you'd like to follow the podcast, Aaron will hopefully be back again in the future, as well as a whole range of other professionals. Make sure you subscribe to the channel, and you can also follow us on Instagram. Head to buyassets.com.au, where you can click the links and hear more about what we have coming up. Until next time, we look forward to having you here so we can buy assets and work less together.
All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.